All right, what up, fam? All right, here we go. Let's dive into this. So here we have the hourly chart. Points of interest I have for the hourly chart is this order block right here. There we go at 39.97. Let's see, hold on. Got myself echoing. There we go. Exit out of there. Okay, back at it. So I have this order block right here. Notice how we kind of touched the top of it, but we never dove into it. So we have this sell side liquidity right here. So I've kind of been watching that as the days go on. We took out buy side liquidity. Just mark that on this hourly chart. We'll mark that as taken. Okay. And so this was today. That buy side liquidity was taken in the morning, New York Open. And we're going to go down into the 15-minute chart. I slept in, didn't wake up for the AM sesh. If we're looking at this 15-minute chart, we have the Asian session that consolidated as it normally does. And then moving into the London Open, London Open failed to take out the Asian lows. So that's why I was kind of thinking that we might target down here, this 39.97 at the end of the day, and sweep the Asian lows. However, we did not today, which is fine. But we did run up and we took out this buy side liquidity. Now I did have the Asian sesh set up with the CBDR. And if you notice, I kind of like to divide it. Instead of one standard deviation, I line it up like this so I get half boxes in here basically. So it ended up going one standard deviation, which was this line right up here. And as you can see, it got above it and it rejected, and then it rejected hard away from that area right up here at 40.32. So that was my first indication that we had gone up above all these highs and we had hit this standard deviation. And so now I'm looking for what are my targets below the Asian lows. All right, so let's go down to a 1 minute chart. Okay. So I think I started looking at the market right around basically right around here. That's kind of when I opened up my charts. And so the first thing that my eyes drew to was we had this fair value gap right here. And if you extend it all the way across, we had almost another fair value gap that lines up directly with it. So it's almost like just 1 point below. So from here to here, you have this one pass through on the up candle. Take out buy side liquidity. It's the standard deviation, and then it comes and it passes through here. These are key areas that you want to take note of on your chart, because this is what they're talking about when ICT mentions a balanced price range. So in his video, I believe that he talks about when you see this, and then you come over here and you see the same thing, price is going to want to get back up into this area, and either it's going to come up again and then come back down, and now it's completely balanced because it wants to offer um, buy side and sell side price on these so it can move forward. Sometimes it comes up to the median, and sometimes it'll just touch into that area and come back down, and then it'll reprice later on. So this was kind of my target for a short entry. Um, Now talking about time of day, we got this at 10:40, so we're just finishing up the New York kill zone, getting into 11 o'clock, which is right about here. We make the low of the New York sesh, and then we start working our way back up. Price quickly runs away. Now, when you look at this, this is all the distribution from price going up here, and now it's distributing down here. When this runs up and comes back and makes this swing low, this is where my eyes went to next. Okay, we have a equal highs right here, and it's in a fair value gap. So what's price going to want to do? It's going to want to come out and take out these equal highs. So if you go back through the feed, I mentioned, what do you guys see? What's a point of interest on the 1 minute chart where price is going to head? This didn't create an optimal trade entry for a long position. So we're not looking for a reversal to where we're going to come back up here and take out the highs of the day, but we're looking for what are the points of interest that they're going to want to draw liquidity on. And so we have our equal highs right here, and then we have our balanced price range right here. So this was an easy, you basically could have jumped in anywhere along here and set your take profit for just above here. And what does it do? Price comes just above it, takes out those equal highs, and then comes back down. So your second trade, and I was talking about this on the Discord, is there is your one trade. That was, let's see if you got in right here, 4011 to 4018. So that's a 7-point move. You captured your 4 to 5 handles, and that's a easy $1,000 in your pocket right there. You can go short right at these equal highs, and then look at what it created on the way up. Very prominent swing lows. So then what's price going to want to do? I was watching this area to see if it would get up into here, and because it rejected so quickly, now I'm thinking, okay, it's going to seek sell side liquidity before making its way back up into this range. So it comes down, boom, that's one area to take profit, and here's your second. And if you got in short at the equal highs, that's 4018, and if you exited at this swing low, that's 4009. So again, that's almost 10 points right there. That's another $1,000 or so that you could have banked just on identifying points of interest and where price is going to want to go. So right around this time here, 12:30, I brought your guys' attention to this area right here. And I said, what do you guys see above us? Where's the imbalance at? And this is what I was talking about. And I tried to not give it away because I think it's better for you guys to look at the charts and try to figure it out because it helps you learn. So that was the next area I was looking at. So we have a swing high right here, and then we have this imbalance right up here. And then what else do we have on our side? We have time. So time before price. So it's just slowly working its way up. and then we get up into here, and I actually had my I had two entries. I had one that was set for like right at the bottom of this in case it just did that, came into this area, just tapped it and came out, and then I had one set for the mean. So let's see where that landed at. I think it just got the, yeah. And so I set it just below the mean at 40.21. And what does it do? It hits the mean of this imbalance. It's that consequent encroachment. And that's where we get our rejection. And then it should not break this as it's gone up into the mean, and we should see it move away. So it went away pretty quickly after this little consolidation pattern, and then you can see price quickly moves away and rejects from that imbalance area. Now, because we got down here so quickly, this was 215. To me, if we were going to hit down here, there was still too much time if that was going to be the target price. So I figured that it would probably mess around and consolidate, retrace a little bit because it needed the time waste now because this was such a quick move. This was 40.21 to 4,008. So you're looking at a 13-point move. Again, that was a very quick couple $1,000s in your pocket. So out of all those moves that I called out, now you're looking at banking anywhere from 2 to 4K, which is a really good day just in this PM session. So we'll extend this out over here. Price works its way back up. What does it do? We have a sell side imbalance, buy side inefficiency. Comes back up and it rebalances all this. Doesn't get into the BPR, and then it slowly starts making its way down. Consolidation, and then punches through. My end target was 4,007, which was right below this low that it made right here. And the reason why I pulled my target from here is because we spent all this time coming back up and then just slowly working our way down, we didn't immediately come down and break these lows quickly. Then to me, that's the market showing that it's going to time waste. So as this started moving down, I would set my stop loss. Like as we broke down into this area, I moved my stop loss down to here because we shouldn't be coming back up into this. We should be searching for that sell side liquidity. It caught me right here. I should have kept it right here, but I ended up moving my stop loss to here. It caught me, and then I just re-entered another 6 cons and set my take profit at the 4,007. So when you're watching price action and it reaches points by a certain time, that should tell you what price is going to be willing to do or wants to do. And if it gets to an area too quickly, then there's higher probability that it can retrace up, it can consolidate. And who knows, it could have came back up in here and filled this, done some moves up in here and then came back down. But I think because it hit the mean, it was the high probability was that it wasn't going to come up above this high. at 205, which was 40.2125. I did hold my original positions all through this. Um, so I went from being up like 3 grand to only up $300, and just held because I wanted to test that this was going to hold the price below it. And that's another thing that I'm trying to work on, is working on trusting where the exit's going to be at, and learning when to trust that based off of how much time is left in the trading day. And then at the end of the day, we made this nice dump down to hit our target. All right. That's all I got for you on the PM sesh. Thanks for listening. Hope everyone has a good day.